This is Greg Michalowski from FXDD, and this is a Forex Quick for the US dollar versus the Japanese yen, brought to you by FXDD. Let's take a look at this currency pair, and what can we say here about today's action? Well, it's down, up, down, up. This looks like the sterling versus US dollar that we saw last week when the market was in a non-trending range, moving up and down, up and down, up and down every day. Today we took a lap of the lows and the highs today, 1, 2, 3, 4 different times. What we can say about this chart? Well, what we can say in certainty is that we can count 1, 2, 3, 4, 5 different times this trend line has been tested. That's significant, wouldn't you say? So needless to say, the market is remaining below that trend line, and we're getting lower highs on all the corrective moves to the upside. Now, can we say about the downside? Well, we broke through the previous low here, but this low right here was higher than the previous low. You might want to say it's pretty much even. We came in here, we found the buyers against the lows here at the 56 level. I think the low came in at 60. So we have equal lows down on the downside. Now, from a technical perspective, you want to keep your options open here. From a technical perspective, a move above this trend line should see further moves to the upside, perhaps toward this 50% retracement level, toward this 200-hour moving average at 93.67. That would be the first target off the hourly chart on a break around the 193.30-ish type area on the top side. On the downside, we do have this support area, which comes in at the 93.14 level. We had a number of different lows here along the way going back in time, and we break through that level. In fact, we're currently trading at the moment at that level. The next level to get through would be what I consider this old trend line here from these lows over here. And if we head through that level, then we should head on down toward the 92.56 level on the downside. So that is the how the charts look from that hourly perspective. Let's go to the daily chart. Take a look at that from a longer term perspective. And what we can see here for this currency pair is that this is a low from 2010. This is a high from 2010. The 38.2% retracement comes in at 92.24. We've been above the 200-day moving average for quite some time now, really about a month's time. So that's positive for the currency pair. But needless to say, we did find some resistance up here toward the 95 level, and the market showing some sorts of weakness here for the currency pair. But from the daily perspective, we do also have this big, huge tail. So we're going to be watching this 93.14 this level, where the market is currently trading at, and where that key support level comes in currently at the moment. And if the market starts to dip a little bit lower, maybe we get rid of some of this tail, and the bias heads on down toward the 92.24 support level, 38.2% retracement of the 2010 low to high range. This is Greg Michalowski from FXDD, and this is a Forex Quick for the dollar versus yen.